New Zealand stands out as one of the few countries without a capital gains tax, but with billions in potential revenue on the table, could this be about to change?
We are back in your life, and today we're talking about what would happen in New Zealand if there was a capital gains tax. And there is one man that we need to join us, Matthew Harris, Managing Director at Lighthouse and property investor and developer. Matt, welcome to the set that you've built.
Look, I'm really happy to be here. Your enthusiasm's blowing me away for this late in the afternoon. And I can't claim credit for the whole thing, but surely I would have done a better job with the walls in this place.
Yeah. Tell us in the comments, what should we put on the walls? That'll probably get pretty
Mike
loose.
just said to me, if you're wearing a white t-shirt, you're just going to be a hit.
Yeah.
The picture.
So, Michael, before we start to talk about what would happen if there was a capital gains tax in New Zealand, can you break down the current landscape for us?
Yeah, cool. So currently, no capital gains tax on property in New Zealand. We do have some tax around if you buy and sell an investment property within a certain time, if you're property flipping, these types of activities. But generally speaking, there is no capital gains tax in New Zealand on property.
And to give you a stat, in a down market, and boy, has it been a down market, approximately $20 billion has been lent to New Zealand property investors just in the last 12 months. If we start to think about $20 billion of lending, a capital gains tax, that's a hell of a lot of tax.
It's a hell of a lot of tax. And to be honest, capital gains is something that's not dear to my heart. As a long-time property investor and developer, and also an accountant who's helped countless people grow wealth through property, I can definitely say that capital gains is something that, the fact that we don't have it is probably taken for granted a little bit, but is also part of the landscape of New Zealand. And to give you an idea, when I first started working in inland revenue in April 2006, they were talking about putting a capital gains tax in there, and that's nearly 20 years ago.
Yeah, we do hear quite often from expats living overseas, thinking about buying property or investing in property. A lot of them end up coming back to New Zealand to buy or invest because of the capital gains tax. And that goes along with other things like stamp duty as well, which you have in the UK and in Australia.
Yeah. It is quite unusual, right? Like, it's for New Zealand to not have a capital gains tax. If you compare us to other OECD countries, like, are we pretty much the only one?
I think we are the only OECD country, and that's a stat banded around a lot, that we're the only OECD country without a capital gains tax. But, more than that, you're right, we don't have stamp duty, so the transactional cost of real estate in this country is quite low. And then we don't have other things that property markets in other countries have that make property deals, more difficult. Gazumping, for example, in the UK, which is just madness.
Oh, yeah, absolutely.
And I think, what it boils down to is that because we have this really favourable tax system in terms of capital gains, we get probably an overwhelmingly large amount of people invest in property over other assets.
Yeah.
Well, the good thing is we don't have to look very far to see a system that might work for us. Let's look at Australia and talk about the capital gains tax system in Australia. So it is quite simple. You pay capital gains tax at your marginal income tax rate, but you get a 50% discount if you hold the asset for more than 12 months. If we apply this to New Zealand, hypothetically, it would be $1 billion in hypothetical gains a year, which would be $150 million in additional tax.
Yeah. I mean, if you just draw a straight line with the numbers, but what I think you've got to talk about there is the externality and the negative externalities around what that would do to the market. So if I was the government and I was going out, I would say, we're going to bring in an extra this much money, or something that's not taxed, and then we're going to go that and spend it on schools and hospitals and that sort of thing. That's unlikely to be what actually happens in reality, though, because people will stop selling assets, they'll hang on to assets, that'll cause house prices to increase slightly, and if you think about it, they will just start trying to get around the capital gains tax.
I think there's this great thing in tax which is like the cornerstone of good tax policies, that good tax policy doesn't influence decisions, which, if you think about it, doesn't make any sense at all.
Yeah.
If we start to tax capital gains, I think probably what you'll see is you won't see people leave the market. You'll see a flight to larger personal owned occupied homes because they will almost certainly be exempt. And then you'll see, you're dead right, you'll see a whole lot of behaviour that will lean into the properties that have discounts. So in Australia, for example, they have 50% discounts, I believe, in trust structures. So you'll see more trusts getting used. You'll see all this behaviour that will sort of skirt around the capital gains tax before you see a change in the market behavior. And then I've said this heaps in podcasts with you guys. It's like, what happens if property investors leave the market en masse in New Zealand? Does that drive a bigger issue than the $150 million that the government's surely not going to spend properly anyway?
We've done this in a podcast, man. Have you not watched it? House prices go down 50% if there's no property investors.
Yeah.
I think in reality, though,
What about government costs, though? They go up surely 100%.
Yeah.
I think probably one of the other things to consider, though, is like, we are an outlier, and there's an argument to be made that, because we're an outlier, we should fall into line. But, just because other countries do it, whether it is taxing someone or not taxing someone, isn't actually a reason for us to do it as well. And case in point, to everyone going out there and saying the government can borrow more debt because everyone else has much higher GDP or debt to GDP ratios. We are not other countries. The other argument, I guess, as well, people won't invest into houses. They'll invest into more productive assets like businesses and these sorts of things. Yeah, maybe, but I would say a far easier way for Kiwis to invest is a house, because it's very simple to understand. If you look at one of our largest income-producing sectors in the country, farming, also not a particularly productive industry. You can run a farm by employing 4 people. It's not like a manufacturing plant when you employ 50, 60, 70 people, and actually that income and wages gets recycled back into the economy. So I'm not sold on the fact that capital gains tax is, one, going to fix the property market if it's broken, or two, going to provide a substantial amount of tax that could be spent somewhere.
Yeah, look, I mean, 2 comments there. The government's tried to fix the property market numerous ways over the last 5 to 6 years. Trying to hit the demand side when really we've got a supply side issue, we've got consenting problems, we've got land restrictions, all the stuff that makes it hard to build and deliver houses at scale here to increase the supply.
And they've tried, but first it was foreign investors.
Yeah.
Then it was we'll remove some tax,
interest deductibility,
and then this
smack the demand, smack the demand. Yeah.
It just doesn't work. So and again, like.
And look, the other comment about it is that New Zealand, one of the strengths of New Zealand's tax system is beautifully simple. There's very few exemptions for GST, for example. A lot of other countries have exemptions on all sorts of stuff, ranging from fruit and veggies to motor vehicle clean tax credits, that kind of stuff. Here we have this really clean, low rate, broad-based system. This is going to add more complexity, maybe not as much complexity as taxation land provisions, which try to stop all the behavior in the property market. But overall, like, one of the things that makes this country work quite well is that it is simple, and we just don't have a sophisticated enough economy to have a huge layer of complexity.
Yeah. So my main concern, though, is probably what happened when the last government was in, when he was, got in the way and was like, no capital gains tax, and they made this super complicated system around it.
Yeah.
And it would have just been so much easier. For example, if interest deductibility got removed again, that would hurt our multi-unit properties quite a lot.
Yeah, it would.
But this is to Matt's point. When you bring in complexity with tax, disproportionately, that starts benefiting the people who can afford the professional advice to get around it. And if you bring in a capital gains tax like this and make it complex, again, people are going to get around it. And if you make it simple, okay, fine. But what is the problem that you're trying to fix? Because, an extra 150 million of tax, it's not nothing, but it's not going to move the needle in any particular fashion for the government.
I agree. I do tend to agree with you too, though, James. Like, there is this real risk that we get the wrong government who does the wrong capital gains tax. And here's the bit that people don't understand. Everyone loves to bash the property person. Capital gains is just that. That's shares. That's business sales. That's you sell your motor vehicle. And you just happen to buy an appreciating asset. They do exist in the car world, to me.
You sound like,
at me like
I'm going to invest in my art and it goes up in value.
Yeah.
My father-in-law,
Porsche, mate.
my father-in-law with what has he got? What is he?
Skyline.
Yeah, Jason with his Skyline with his orange trims and being like, mate, I shouldn't have invested in a managed fund. I should keep investing more money into Skyline.
Honestly, he had me hooked on the Skyline chat. He showed me it wasn't even a turbo one. I was like, mate.
But even if you think about those asset classes that you just described, like art, like cars, like people use those assets as a vehicle to get around tax, right? So just because there's a capital gains tax on there, again, as you add complexity, people who have access to professional advice will avoid paying tax.
Look, and back to your sphere of interest, right? How many people in this country rely on selling their small business to fund their retirement?
Yep.
Yeah.
Way too many.
They want the home run.
Yeah.
And they need the home run.
They need the home run.
Yeah.
Yeah. So there's that. But if we go back, like, and you go, Matt, what's your opinion on a capital gains tax? I think it's probably inevitable. I don't necessarily think it's a bad thing as long as it's implemented correctly.
Yeah.
What will happen is that long-term investors will be just that. They'll continue to hold long-term. It'll probably drive a behavior where they hold longer than they might have otherwise to manage, because they want the highest possible return because they know it's taxed. There'll be people that will obviously lean into the bigger house thing and, that makes a lot of sense. And
Does it make sense?
Yeah. Well, if your owner-occupied property is exempt from capital gains, and I could buy my owner-occupied and an investment property, or I could just tip it all into a giant owner-occupied property, multiply, get the leverage up. You'd do that because
To eventually downsize.
Yeah, correct. And, there's balance in that stuff. But, for example, the value of my own occupied property, for example, is dwarfed by the value of my property portfolio.
Yeah.
And it would just make no sense to switch them around at the moment. Not only for the fact I wouldn't need a bigger house to begin with. It'd be fun. The point about it is that I don't think it's a bad thing. I think if it does come in, they will take a valuation approach, which would make a lot of sense. So all those who are in the market will get their properties valued at that time.
Yeah.
And that will be like a rollover, and then any gain after that be taxed. You'll see a ton of activity leading up to it. People will be mad out buying properties, and people who are ready to downsize will be selling them. So we'll have this huge artificial boom in property in New Zealand, and then we'll get this really long, probably stagnant period where not much happens.
Yeah. And Matt, I'm actually going to have to disagree with you here, and we're going to do that after the break.
If capital gains tax gets introduced, that's when you're going to need a good accountant. The team at Lighthouse can help you out. Get in touch with us via the notes below. Now back to the episode.
So, Michael, you disagree with Matt. Tell me more.
So
How
right
dare
at
you.
the start of that, Matt said, we are the only one without. So fundamentally, I think it's going to happen eventually. And I think it's probably a good thing. I don't think it's a good thing. And I'm not usually one to say this, but to be honest, I am sick of more taxes. Like, honestly, I just don't trust that the government will take the money and spend it better than the individual can.
Am I allowed to defend it actually? Because I should have clarified why I think it's a good thing.
Yeah, go for it.
Yeah, I agree. If you look at the amount of tax levied in this country, as an overall percentage, it is on par with the rest of the OECD countries. We've got fuel excise tax, tobacco, alcohol, road user charges, GST, PAYE, FBT, blah, blah, blah. On top of that, we pay council rates, we pay EQC, we pay ACC. We are not short of a tax or a levy in this country. So I agree with that 100%. I guess it was from the perspective of simplicity back into the tax system. The taxation land provisions have got so out of control, and we run the risk of this interest deductibility being reintroduced by subsequent governments. If that happens, we're far better off to have a capital gains tax, which is levied at the end. Yeah. Once we've grown the wealth, rather than a cash flow tax, which takes from our pocket every year.
Yeah, I do think it's inevitable. I think likely the next Labour Green government will introduce it, and I do tend to agree with the if it's inevitable, the most important thing is you just do it in a really simple way. The Australian system where you pay like half your marginal tax rate seems like a reasonable outcome to me.
Yeah, absolutely. I just think there's enough tax. It does not get spent well enough. Giving them another 150 mil, one, isn't going to move the dial. And two, it's not really going to get allocated that well anyway. Yeah. Right? So why bother?
There's a whole nother episode on tax creep in Western countries.
And yet once it comes in, it's never going back.
No.
They're never going to roll it back, right? And that's what I think is really dangerous, is that just that creep of government, of tax, of laws.
So if I was to make the argument of why a capital gains tax is helpful, the goal would be to try and reduce inequality, to cool the housing market, to increase government revenue so they can potentially spend money in some good areas. Is there a better way to get to the same outcome?
I think there's a different way to get to the same outcome. I don't think it's better. So if you look at the alternatives, land tax, for example, that's equivalent to a rate. Rates, land tax, all that stuff is cash flow driven. And as you guys very well know, and I definitely know, and also, I don't know if you checked York and Council ratings valuation, but they've come out today and it's not pretty.
Yeah.
Property is meant to be a long-term game, and it has to be because the property market goes up and down. So sometimes we go through periods where we don't have much cash flow. Cue the last 3 years.
Yep.
Imagine having paid a land tax on top of interest deductibility.
Yeah.
And extra insurance, extra interest. It would be increasingly harder for people to build and maintain portfolios. So on that basis, I think when you sell an asset and you have the money to pay the tax, is always going to be more palatable.
Yeah, and I think there are better ways to get there. If you want to increase equality, provide an economy, access to capital and opportunities that allow people to do it themselves instead of trying to tax and try and redistribute everything. And I don't think you need to increase taxes to do that fundamentally.
And so the other argument as well is to do with if you increase the supply of housing, there is enough houses that
the market regulates itself.
Yeah, that's for sure. And if you I don't know if you guys looked around recently on Trade Me, a lot of houses on Trade Me, right?
Yeah.
As the market picks up steam, the supply of housing is really important that it continues.
But there is more houses, and it hasn't fixed the issue of affordability. And again, it's that thing of like, I'm just not sure tax is going to fix affordability. There are more houses for sale, but there isn't really like an increase in actual stock of houses on the market. Building more houses is, going to help fix that problem of affordability. Providing an economy where, there are better paying jobs, there is more stuff going on. We are richer because of our Kiwi savers. That is the way that you are going to provide an environment for Kiwis where they can get ahead, not trying to tax people who own land.
This is a great platform for your next election, actually.
Too many skeletons in the closet, mate. He's the guy you want.
Yeah, and I'll have him in the background.
He's the puppet. You're the puppet master.
Yeah, puppet away. So, look, I feel like the comment section's going to come after us and be like, you're just a bunch of property guys in your white shirts and whatever the hell color that is. And you just want property to go up so you can just make more money. Look, I think part of this is going that a capital gains tax, it's feeling less like if, but when it's going to happen. What's our prediction? I think it's probably the next government that's going to be put in place. The main thing I hope for is it's just a simple structure that is implemented.
Yeah.
I think we're 2 governments away. I think the next government will try, but they'll chicken out. But they'll lay the platform and the next one will do it.
Yeah, and come at me. Call me just a property guy that wants, the values to go up. I do want the values to go up, but along with that, I want wages to go up. I want opportunities to go up. I want everything else to come along with it. So of course I want the price of assets to increase, but not just property, all assets and the general wealth of Kiwis. Yeah.
Matt, what did Winston Churchill say about taxing?
Yeah, he said that taxing a country into prosperity is like standing in a bucket and trying to lift yourself up by the handle.
Yeah.
On that note, we will leave it right there. Let us know what you think in the comments section. And while you're around the comments, that subscribe button is just nearby. So subscribe, review, give us a like, and we'll catch you next time.
We'll fight him in the air. We'll fight him on the beaches. We'll fight him in the car park. Cheers to Winston Churchill.
For capitalism.
Yeah, here's to capitalism and the khaki shirt.